Hey everyone, welcome back to the channel. This is LC. Today, I want to try something new. We will read Power Root Bhd Annual Report 2018 together. The report was released on 21st July 2018. Their financial period ended on 31st March. I will go through main sections of the annual report review, show you how to dig into the details, form my opinion, and drafting questions to be asked during AGM. Before I go further, I have to declare my interest. At the time of recording this video, I own shares of Power Root. I have no intention to promote this stock. Please assume my opinions and comments are biased and discount what I'm going to say in this video. I believe you're adult and mature enough to form your own opinion. To cut short this video, I have actually keyed in financial data in the 3 financial statements into my database and updated my Excel accordingly. This Excel is not our main focus today. Honestly speaking, due to I have read FY18 Q4 quarterly report and just key in financial data into database, I already have some ideas what to investigate further. In order to record this video, I have controlled myself not to eyeball the details too much in the annual report. I haven't read the notes, analyzed the numbers, analyzed key ratios, identified red flags, and read MD&A. Okay, let's start. Alright, this table shows trend of business performance from 2014 to 2018. Revenue wise, good, increasing. Operating profit declined from 60 million to 16 million. Profit before tax dropped from 54 million to 10 million. Okay, for sure, the earnings per share won't be appealing. This table already gave us a couple of things to investigate. We want to find out the reason significant decrease of operating profit while Power Root maintain their top line. Few key items could contribute to this. It could be cost of goods sold and operating expenses. So let's take a note here. Operating profits decline from 16 million FY17 Let's move on. Alright, all these are not really important. Okay, this is important. MD&A, management discussion and analysis. This is very important section, but I usually leave it to the last. I'm usually skeptical with information disclosed in MD&A because in my opinion, companies tend to positive framing their issues. They tell you what they want you to know. I want to go through the numbers myself, form my opinion, comments, and questions. Then at the end, I will visit MD&A to validate my opinion and find answers for my questions. We skip MD&A for now and we will revisit it later. Corporate governance overview statement. This is of course important, but usually I don't really have much concern about this. As for the salary, unless you know the market rate, otherwise it's very hard for you to compare whether their salary is fair enough. Usually MSWG will do the job. Let's move on. This is audit committee report. Let's move on. Statement on risk and internal control. Nothing much here. We just move on. Okay, financial statements. Okay, start with director's report. Okay, usually this report gives you a summary of the business performance and the corporate exercises in FY18. Okay. We can look into this shareholdings analysis later. I don't think it's important at this moment. Let's move on. Alright, they have e-source. Okay. Yeah, in FY 2018, they also do a bonus issue and also free warrants. This is known. Okay, we can just skip. Okay, here is the balance sheet. But I think let's start with income statement. Alright, just now we talked about revenue. Okay, we pass. Other income 10 million to 2.3 million. We need to further investigate this. So let's type here other income 10 million FY17 to 2.3 million. Cost of goods sold. We have to sum up changes in inventories of finished goods and work in progress and raw materials used. I already have the numbers in my Excel. Let's check. Alright. Cost of goods sold increased from 177 million to 217 million. A big jump. So we have to record down this. Let's check the gross margin. Wow, alright, you see the gross margin dropped from 55.6% to 48.7%. We need an answer for this. So let's take note. Gross margin profit dropped from 55.6% FY17 to 48.7% FY18. Let's go to the next line item. Marketing expenses is a big increase. Let's see. Let's do a quick check. Alright, it means in FY18, 1 ringgit of marketing expenses generate 4.38 revenue, and in FY17, 1 to 4.5. I think no big deal here. Pass. Staff cost, depreciation and amortization expenses, nothing alarming. We will check capex later. Other expenses, 48 million in FY18, 38 million in FY17. So we have to take note. Other expenses. Finance income, no big deal. Okay, pass. Finance cost increased from 333,000 to 581,000. I guess they were new. Yeah, I think they were new borrowing. We will check it out later. But let's take note here. Finance cost 33k to 581k. Yeah, of course the net income definitely dropped from 47 million to 9.7 million because of cost of goods sold, higher expenses, all these things. We have to look into the reasons later. Let's move on. Okay, there is one, I think it's a small red flag here. 1.1 million of forex translation differences, which may reclassify into P&L. Okay, we have to know what is this. In the OCI, forex translation differences. $1.1 million loss may be classified to P&L. Alright, we just finished the income statement. Yeah, I make a small mistake. Should be gross profit margin. Now we read the balance sheet. Property, plant and equipment. Alright, we will check note 3 later. Other investments. We will check note 9 to see type of investment. Let's move to inventories. Oh, big increase from 49 million to 69 million. Let's type this into Microsoft Word. Inventories. Big increase from 49 million FY17 to 69.6 million FY18. We can check days in inventory. Let's have a look of the key ratio. The latest days in inventory was 100. I think it is within the range, no big deal. One question though, will the big increase of inventory be translated to higher revenue in FY19? So this is a question. Will the big increase trade and other receivables? Nothing alarming here, but we have to check note 12. Let's move on. Loans and borrowings. Okay, you can see there was about, I think, 20 million of new borrowing. We will check the gearing later in note 15. Trade and other payables. Nothing alarming here, but we will check note 16 later. Next, let's have a look of cash flow statement. For some unknown reasons, I always like to start with cash flows from financing activities. The only item caught my attention is net proceeds of bankers' acceptances, 20 million. This is a short-term debt. I don't mind company make borrowing, but I'm more concerned about the reason. 20 million borrowing for what? 20 million FY18 borrowing. For what purpose? Next section, cash flows from investing activities. As for the capex, we will check note 3 and note 22 later. Acquisitions of shares from non-controlling interest in a subsidiary. This is quite a large acquisition. There is no note indicated here. Yeah, we can find this in balance sheet. Yeah, note 6. We will check it out later. Let's go back to the cash flows from... Okay, now we should go to cash flows from operating activities. Let's check item by item. Alright, here there is a big item. Impairment loss on property, plant and equipment, 2.3 million. What kind of PP&E was that? And what was the reason? So let's take note. Impairment loss on PP&E, 2.3 million. Type of PP&E, reason. For changes of working capital, As I mentioned before, we have to check changes in inventory. We want to be assured that Power Root can turn these inventories into big sales in FY19. For the other changes, we will check their notes respectively. Alright, basically we have finished reading the 3 financial statements. We have a couple of things to investigate. What we did just now was warming up. We have to dig out the details in footnotes. Move on. Alright, note 1, note 2. All these are bedtime story. You can read if you are having insomnia. There was about 1.9 million of additions of PP&E and about 2.3 sorry, this is the depreciation. Okay, impairment loss. Yeah, here we have about 2.3 impairment loss. Alright. Other than this, I can't find other issue. Let's go down. Here is the reason of impairment losses. Agglomerated coffee agro products was operating below the normal capacity. Alright, the number is not big, but my question here is, what is the reason of operating below the normal capacity? Alright. Agro coffee. Production line. Another big one, 1.9 million. This is because of the relocation of factory from Ras Al Khaimah to Bahrain. So this is okay, relocation of factory. Alright, so at least we found the reason. Relocation of factory from Ras Al Khaimah to Bahrain. So my question is, what is the reason of moving? Should be relocating. Let's move on. Investment properties. Can skip. Intangible asset, not a big amount. Let's skip. Investments in subsidiaries. Yeah, you see here there was about 9 million of acquisitions of shares. Yeah, just now, remember in the balance sheet, there was about 9.2 million, in the cash flow of investing activities, there was about 9 million of acquisitions of shares. Let's find the answer here. Okay, you can see there are a couple of companies here in United Arab Emirates. I think Power Root increased their ownership of these companies. Let's move on. Okay, here 6.2, there is an explanation. So the company acquired 6% interest of Power Root, me, FZCO, for 9.2 million in cash. Alright, nothing special here. We already have the answer. Investment in associate. Nothing much. Deferred tax asset. It's not really important. It's just the paper figures. Inventories. Just now I see other investments. Power Root invested about 6 million in unit trust funds. 6 million. What is the total assets? Total assets. Is 355 million. So let's say you take this, we launch a calculator. 6 million over 355 million. It's just about 1.6%. I think no big deal. Alright. But something strange though. You see, unquoted investment 392,000. Impairment loss 392,000. What is this? I think we have to ask the senior management. We go back to inventories. Yeah, this just confirms our finding. As I said before, we want to be assured that Power Root can turn these inventories into big sales in FY19. But of course, in this footnote, you can't find the answer. Later, we have to read MD&A. If we can't find answer there, we have to ask the senior management during AGM. The next section is trade and other receivables. As for trade receivables, let's have a look of the days in receivables. Basically, it's within the range, so nothing alarming here. We have to check risk of account receivable later. Cash and cash equivalents. Okay. Capital and reserves, we skip. Capital reserves. Okay, loans and borrowings. Here we can see, we can see the drawdown of 20 million of bankers' acceptances. Let's scroll down a little bit. It doesn't mention why Power Root draw down 20 million of bankers' acceptances. We will check MD&A later. If not, we post question during AGM. Let's check the gearing. Let's switch to Excel. The key ratio. Actually, the gearing is quite low. Alright, let's move on. Trade and other payables. As for accounts payable, we can check days payable outstanding. Nothing alarming here. However, we have to check risk exposed in accounts payable later. The next section is tax expense. Alright. We just have to trust the auditor and accountant. Profit for the year. Okay, let's have a look. This is impairment loss. Alright. Impairment loss, okay. We see this. Write down of inventories 2.8 million. Alright, something to ask them. In what situation will Power Root write down inventories? Something to ask during AGM. Write down of inventories 2.8 million. In what situation will Power Root write down inventories? Wait. Did I see this in cash flow statement? Let's go back to cash flow statement. It is not in cash flow statement. Write down of inventories is non-cash item. It's supposed to be shown in operating cash flow. It's supposed to be adjusted. How to confirm this? Okay, yeah, I have a way to confirm this. Inventories write down. Where is? Oh yeah, inventories write down. Let's see. Doesn't equal. Padini 2017. Let's have a look at Padini annual report. Where is it? Oh, cash flow. Inventories written down 7.2 million. Yeah, because this is a non-cash item, it should be adjusted in cash flow statement. Let's see, is there any other company? Petronas Chemical. Yeah, Padini. Or Sapra Energy. Tax. Yeah, JT Intel, okay, of course delisted, Sunway, TSH. Yeah, you see? Alright. Inventories written down is a non-cash, so it's supposed to be adjusted in operating cash flow because it is related to operational item on the balance sheet. But the funny thing is, the balance sheet of Power Root is balanced, so it means somehow and somewhere the 2.8 million was adjusted in the cash flow statement, but it is not shown here. Could it be 2.8 million was included in changes in inventories? It is still a wrong presentation. Even if they say they included in changes inventories, it's supposed to show here, not here. Okay, I must send email to the investor relation. I can't wait until AGM. This is a bit unacceptable and also unbelievable. So let me take note. All right, this write down, not appear in cash flow statement. This is non-cash item. Go back to the profit of the year. Where was it? Earnings per share. Alright, we know there's a big decrease. Employee benefits. Okay. I think we can skip this one. Dividends. Nothing much. Acquisition of PP&E. So here you mentioned, yeah, there was about 7.2 million of capex. Alright. Operating segments. Okay, revenue from local and overseas is about 50 to 50. And there is a major customer. Okay, not really a big deal. Look, let's move on to the financial instruments. Alright, we can nothing special here, we can skip. Alright, receivables. Oh, most of their receivables actually in local. Okay, something alarming. You see, over 90 days, 26 million. Okay, the net is 25 million. How about 2017? 2017 is 24 million. Okay, net is 23 million. So this is a red flag. We have to take note. AR more than 90 days. 5 million. And 20 million, 23 million in FY 2017. Yeah, we have to ask this during AGM. Okay, let's go down. Currency risk. Yeah. So most of their exposure is in USD. Usually they have, there is a sensitivity analysis. So if 10% strengthening of Ringgit Malaysia against USD, Singapore dollar and renminbi, they will make losses, 2.8 million loss. 10% weakening of Ringgit Malaysia, so it will be have opposite effect. It means, let's say 10% weakening of Ringgit Malaysia against USD, they will enjoy 2.8 million positive. Maybe we can check the recent movement of USD against Ringgit Malaysia. Alright, recently Ringgit is quite weak. So weak Ringgit Malaysia is good for export. I think Ringgit Malaysia will continue to be weak. Alright, let's pass. Market risk. Okay, capital management we can skip. Capital commitment. This is related to capex. Okay. Contingent liabilities. Alright, amount is 31 million. Actually, this is guarantees for loan. I don't think Power Root will default. Related parties. Related parties. Okay. Subsequent events, bonus issues and free warrants. Okay, we already aware of this. Skip. The next section, okay, statement by directors. Okay, we can skip this. Independent auditors report. Alright, let's see what is their opinion. So this financial statement gives a true and fair view of the financial position of the group. So this is a clean opinion. What are the other things? Completeness of advertising, promotional expenses. Okay, no big deal. Let's move on. List of properties, we skip. Analysis of shareholdings. Okay, obviously these three guys are the major shareholders. Nothing much. There are some local fund. Okay, we skip this. AGM, the ordinary businesses. Alright, I skip this for the time being. So they will be having AGM on 27 August, 2:30 PM at JB. Alright. Last but not least, MD&A. Let's quickly go through the MD&A. Alright, it's nothing much here. The business environment, okay, weak consumer sentiments, all this are actually, well, this is all known. Productions. Oh, so I just quickly go through. Alright. Integrated. Marketing. Roca Nova. Okay, we can skip this. Appointment. Ali Cafe Ambassador. Skip. Okay, we skip. Burley and Manang. Okay, skip. Awa Cafe. Skip. Actually, I don't know why they put all this in MD&A. Anyway, it's okay. Mixed martial arts, alright. Good. Overseas operations, growth in MENA was positive. Okay. Here they explain why they relocate factory to Bahrain. Apparently, if they move to Bahrain, they can get grant up to 6 million ringgit Malaysia. Alright, so we found the reason why they move to Bahrain. So finance grant up to 6 million. Ringgit Malaysia. Let's see, is there any other things? We also provide. So they are also building their presence in Singapore and China, both online. Okay, good. Yeah, China market is good. Yeah, China people like Miss Coffee. Okay, it's a summary of business performance. Writing down inventories, suffer of impairment loss. This thing. Basically, they just confirm our findings, but didn't tell us much. Total offsets. Dividend per share. Okay, actually pretty good. They still pay us a 9.5 cent. Industry outlook. The group believes that the beverage industry will remain competitive. Alright. Remember, there are high level of inventories. This is not really promising. This is the question to ask in AGM. So the main growth drivers of Power Root is the UAE market, the China market, and Singapore market. Generally, in long term, growth of demand in beverages aligns with growing population. Alright, let's go to my financial modeling. I'm not confident with my forecasting, mainly because I'm not sure whether 48.7% gross margin will be a norm or just a temporary issue. Assume Power Root's gross margin in the next 5 years range in 46% to 48%. Based on my DCF model, its intrinsic value is around 90 cents. I will send email to Power Root and I will have to go to JB to attend the AGM to ask some questions. Despite Power Root facing some challenges like some other companies, I believe Power Root's business will continue to grow. The main concerns are higher cost of goods sold. I need to get more information from the management. High level of inventory. AR aging. And also the write down. That's all. I will go through this annual report again. I may miss out something. If you have finding that I miss out, please leave a comment below. If you enjoyed the video, give me a like and share it out. If you didn't, a dislike. Subscribe for more, and I will see you in the next one.